I've been using a lot of indicators over the last 8 years of trading, and this one by far is my go-to that has made me the most money hands down. And not because it's some hypey, scammy, show you where to enter type of indicator, but because it breaks down exactly what the market trend is right now in a way that uses math, and not a lagging type of math that most indicators use, but a math that shows mathematically, statistically, where the trend is, where the market is, and where it's likely to go. This has saved me so much money from preventing me from crashes, helping me make money to the upside, and so much more. So let's dive in. This indicator is something that everybody has access to no matter what type of platform you're using. So whether you're using your broker platform or you're using TradingView or using something like that, you can still access it. So go to indicators, type in Bollinger Bands. That's the way you spell it, Bollinger bands. You can see right here, Bollinger Bands. This is not going to be how we're going to use it. This is what most of the market knows Bollinger Bands as. We're going to make a few different changes. Number one, we need to make sure that we're looking at the daily chart, meaning that each candle represents 1 day of trading activity. So I'm going to make sure that it says 1 day here, which it does. Now I'm going to go to the settings of the Bollinger Band, and I'm going to change the length to 200, and that's going to make a huge change already. What is this showing mathematically speaking, okay? I don't know if you remember from statistics or math class, but there's something called the bell curve. I'm going to keep this as simple as I can, okay? Bell curve looks like this, and it shows that for any amount of data, any amount of statistical sampling, there falls a point where all the data will be within, or 99% of data will be within a certain range. And that's about 2 standard deviations, or about 96% of the trading volume will always be within this level. So 96% of trading will happen here. What does that mean when we go outside of these ranges? If we go outside of these ranges, that means that's a 2% chance that it actually stays there for any amount of time. So if we get outside of these ranges, that's something we can bet on with very large statistical significance to have a very high win rate. So let me break down how this is shown inside of the Bollinger Band indicator. These are the 2 standard deviation levels. So inside of here is where 96% of trading volume happens roughly. And if we break out below here, which we do occasionally, or we break out above here, this is 2% of trading volume. What does this mean? This means that as soon as we break out to the downside, we have almost 100% chance that it's going to go back in, aka a 98% chance, right? Because everything above it is a 98% chance. So all you need to take away from here is something simple. Is that if we break out to the bottom, we're going to play long. If we break out to the top, we're going to play short, okay? So you can see here, we broke out to the bottom, myself included, a lot of my coaching clients. What we did is we put on options bots that were bullish so that we could take advantage of the market move to the upside right here. Same thing to the downside. Same thing to the downside. When we broke up to the upside, we play the downside because we have a 98% chance of winning. And when we put these trades out longer term, aka we give ourselves 2 months, 3 months to be right on this trade, I basically have a 100% win rate on these trades over the last few years. They do not happen often, but when they do, very high chance of winning. And so that's how I structure those trades. I call them my free money trades because they have an almost 100% win rate. And so that's exactly what I teach inside my coaching program. Again, you can see here underneath my 4 type of bots that I run. The free money bot is this one at extreme levels. If you want to learn more about how you can implement this for yourself, click the first link down below. I'd love to jump on a call and actually show you how this is implemented. But anyways, that's the first way that you can use this band. The second way to use this band is by classifying this section as a bullish section and this section as a bearish section. So when it's in here, it's bullish, meaning that we're going to use bullish strategies. When it's in here, it's bearish, meaning we're going to use bearish strategies and take advantage of the market that way, okay? As you can see, the market is almost always within this range, which means we can make money using bullish strategies most of the time. And when we enter the bearish market, we can then use bearish strategies. So this shows us, just using math, using statistics, where the optimal points in the market are to put on certain strategies so that we have a playbook to run. Hey, if it's in here, run the bullish playbook. Okay, if it's in here, run the bearish playbook. If it's above here, run bearish. If it's in here, run bullish. So that's that way. Now, outside of options trading, what I do want to mention, because this has made me a lot of money as well in my longer term accounts, is I save up money that I want to long-term invest to the S&P 500 because, again, I think you should split. You should have some of your money into an account that you use to generate options income, and then another portion of the account that's just long-term investments, okay, that you never touch. And so these long-term investments, I just build up money in the account that I'm ready to deploy and waiting when the S&P 500 hits this bottom green zone. Why? As we know, it only stays here 2% of the time. So this is the optimal place to buy. And this is amazing because I loaded up on SPY shares here and then it ripped. I loaded up on SPY shares here and then it ripped. And I loaded up a bit more SPY shares here, not as many as here and here, but I bought more SPY shares for my long-term investment portfolio. And now I'm averaging in at literally the bottom level at the lowest point that you can. And so that's how you can use this indicator, the holy grail, I call it, to do so many things. Know when the market is overextended, know the trend for the market, and be able to average in at the best levels as a long-term investor. If you found this helpful, I hope you smash the subscribe button and I hope to see you in another video. But remember, the Bollinger Band indicator is the way if you set it up correctly.